How is everybody?
Good,
Hey,
Jordan.
Jordan. Good.
Awesome, awesome. Let me go and get some levels for everybody real quick. I'll start with you, Ron. Can I please get a count back from five for you?
Five, four, three, two, one.
Awesome, sounding great. And Ed, can I please get a count back from five for you?
5, 4, 3, 2, 1.
Awesome, sounding great. I like that Duke Blue you got on.
Oh yeah, there you go. Let's go, Duke. Greg, this is the article. It's no, that's not the article. Come on, I'll copy it here.
We got about 2 minutes here.
Cool. There we go. Now you know what? Maybe hold on. Share full article. Let me use this copy link. This one. Yeah, do use the second one because this one has the gifted link from the New York Times.
Awesome. Okay. Is my audio okay for today?
Yeah.
No, seriously, I don't know.
Yeah. Yeah. Sounds good.
Cool.
Yeah.
For the bonus, not for Jordan. We're cool there.
I thought you were, Wally Pippin it. There we go.
Yeah.
Greg, do you own or have under your auspices the timesupclub.com domain?
I
You do. Okay. That's where it is, Ron.
Okay.
No wonder I couldn't find it.
It points to threshold and probably comes up for renewal in, I don't know, 9 months or something like that. I really don't know. Yeah.
And I went to look for it because I wanted to. So we need to change it to. I created a threshold, a Times Up Club landing page. Under yeah. So cool. That, and I think it's just Times Up, but so that people are not like just starkly confused. They're like, oh, I thought I was going to Times Up Club, and now it says yes, this used to be Times Up Club. And Ron, you were supposed to open last week. Do you want me to just open so we can continue as normal, or what do you want to do?
Oh, I don't care.
We can just well, let's just swap it. You open today, but we'll leave the rest, so you'll open again next week.
That's fine.
And real quick, Ed, are you able to just bring your microphone a little bit closer?
I am. Yep. How's that? I can also turn it up too.
Just let me get another quick count back for you.
5, 4, 3, 2, 1.
All right, that sounds good right there.
Okay.
And we got about 15 seconds.
Right.
Awesome. I'll be in the background.
All right. Okay. Thanks, Greg.
Shout out Geraldine.
Yeah, first week. Yep.
Next week is in tariffs, right?
Yep.
Tariff tragedy. We'll come up with some name.
Ron's tirade on tariffs.
Ron and Ed's tirade on tariffs.
All right, you ready for your counting?
Yep.
Yeah.
All right, have a great show. Going in 5, 4, 3, 2.
Welcome to the Soul of Enterprise, Business and the Knowledge Economy, sponsored by Woodard, building your ideal practice with coaching, education, community, and resources. I'm Ron Baker, along with my good friend and Threshold colleague, Ed Kless. On today's show, folks, we're talking about Milton's mandate. Hey, Ed, how's it going?
It's going great, Ron. Good to have you back.
Yeah, thank you. Thank you. All is well. It was actually my mom who was in the hospital, and she had a procedure yesterday. The cardiologist was very happy. I am happy. So all is well.
Excellent. Well, all glad to hear that. So fantastic.
Yeah, I got a few emails from listeners, and thank you for your well wishes and asking, hope nothing serious. It wasn't me. It was my mom. So, but all is well. All right, Ed, this article, The Social Responsibility of Business is to Increase Its Profits by Milton Friedman. Originally published in the New York Times Magazine, September 13th, 1970. And I read this in preparation for something that we did a couple weeks ago. I'm blocking on what it was, but we did a show where I
the Boardroom Brawl show.
The Boardroom Brawl. That's right.
Right.
And I picked this up again and read it, as I do every couple years. And I'm just fascinated with how prescient it is and how still it remains topical. And so what I kind of wanted to do in thinking about, hey, we need to do a show specifically on this, I just wanted to read some excerpts because I want to use Friedman's own words, because I think this is one of the most misunderstood articles that he's ever written. And yet, normally he's so clear, right? In his books, Capitalism and Freedom, he did a Newsweek column for, I think, over a decade, where he was very concise and precise with his words. But here, maybe not so much, and we can talk about that. But I just thought I'd go kind of, not every paragraph, but just the highlights and trying to get his main point across. And then we can just pause and talk about each line.
Sounds great. Yep.
Okay.
Yep.
So he starts by saying, when I hear businessmen speak eloquently about the social responsibilities of business in a free enterprise system, I am reminded of the wonderful line about the Frenchman who discovered at the age of 70 that he had been speaking prose all his life. He said that these businessmen contend that business is not concerned merely with profit, but with also promoting desirable social ends, eliminating discrimination, avoiding pollution, and whatever else may be the catchwords of the contemporary crop of reformers. Boy, did he get that right. Right?
They're all still around, though. Subset are all here.
Absolutely. In fact, they are preaching pure and unadulterated socialism. Businessmen who talk this way are unwitting puppets of the intellectual forces that have been undermining the basis of a free society these past decades. Now, that's pretty harsh for Friedman. Unwitting puppets of, socialism. But is there any doubt? I mean, this guy, I forget who said this line, but he said, the trouble with capitalists are business people.
Yeah. Yeah, the trouble with capitalists is a capitalist. But and first of all, to clarify, let's keep in mind zeitgeist of the day. He writes businessman in here. That's his catch-all phrase in 1970. So we want to make sure that we're talking about that. I think that now the rest of the article is a series of steps getting to that, because he defines all the way through how we're going to get from them saying, okay, we need to be socially responsible, to you are doing the socialist ends. By the way, this is the same point that Vivek Ramaswamy made in his book on Woke Inc. Yep. I mean, it's the exact same point, except Friedman's writing 40 years earlier in this point. And what I thought was interesting is in rethinking about Vivek's book on it, he sort of takes Friedman to task for not going far enough, and I think he misunderstands Friedman. Right. I think that. So in any case, and then he does go on to say, and this is the stuff that I think we really want to jump in on. What does it mean to say that business has responsibilities? Only people can have responsibilities. A corporation is an artificial person in the sense that it may have artificial responsibilities, but business as a whole cannot be said to have responsibilities, this even in this vague sense. Now, this is one of the criticisms that I have read, is that people say, well, it has a responsibility to pay its bills, doesn't it? Therefore, it must have some kind of responsibility. And I think that's he says straight out, it has artificial responsibilities because it's an artificial person. So the criticism is, yes, he's addressing that criticism right here. You're missing the point if you think that because a business has to pay its bills, therefore it has responsibilities. That's not what he's saying at all.
No, the people inside the business have to pay the bills and have responsibilities. Right. Yeah. The corporation's an artificial person that really can't be said to have responsibilities, in and of itself. Mm-hmm. It's the people inside, just like, corporations buy nothing, people inside corporations buy things. That's right.
And it's the same argument as like, well, who are made up of, why do we, who pays the tax on from a company? The company pays it. No, the people inside the company pay the tax.
Yeah. So, the corporation, what's that line that no soul, no ass to kick and no soul to damn. Right.
Uh-huh. Right.
It's not a person per se. And he also talks about he's mostly talking, he's completely neglecting individual proprietors, and he's only talking about corporate executives here, and mostly just public companies.
Right, because he talks about the agent problem. The principal agent problem comes up into this as well.
Right. And that he says that the responsibility is to conduct the business in accordance with their desires. Well, let me back up. He says, in a free enterprise private property system, a corporate executive is an employee of the owners of the business. He has direct responsibility to his employers. That responsibility is to conduct the business in accordance with their desires, which generally will be to make as much money as possible while conforming to the basic rules of the society, both those embodied in law and those embodied in ethical custom. Now, that's really important because ethical custom is something external to the corporation being imposed. And if we have time, Ed, I want to go through Michael Novak's 7 internal and external responsibilities of the business. But he says a group of persons might establish a corporation for an elite
Good luck saying that word.
It's eleemosynary. I think it is Mossinary. Eleemosynary.
Okay.
Which is basically a charitable, organization like a hospital or school or something like that. And of course, then they won't have profit as their main goal. But, what he's saying here is the principal agent, like you said, it's the shareholders that own the business. The shareholders are investing their money. Nobody wants to make negative returns or have losses or not make as much as possible. They have assigned the company's executives, the agents, to steward the company's assets to maximize returns, and that includes shareholder wealth. It's not just about profits, and I think this is one of the things that Vivek Ramaswamy took him to task for. But people have to remember, Friedman was an economist. He wasn't a finance professor, and he wasn't an ex-CEO like Vivek. He was, when he says to maximize its profits, or to increase its profits, he's really talking about maximizing the value of the business over the long term, even though he didn't say it that way. And I think that's part of the misunderstanding of this article, because if you're going to maximize long-term value of the business versus just having short-term profits, you're going to behave in very different ways with those two goals, right? A lot of times they conflict, and it's not just about maximizing short-term profits. Otherwise, no drugs would have been created after he wrote this in 1970. Right. And there's a lot of manipulations that you can do to short-term profits.
And that is another criticism that you will see over and over again, that people who read this article think that he is talking specifically about short-term profits, and he never said it. They're all attacking. Many of these criticisms are attacking a straw man of what is actually stated, and for some reason they all leave off both this part, the second part of this sentence, and then the part of his final quotation. They leave this off, right? While conforming to the basic rules of society, both those embodied in law and those embodied in ethical custom. Because the other criticism you see was, well, you can just be a drug dealer then. No, that's absolutely not what he said. That is the complete opposite of what he said. Well, that just means that you could sell somebody a drug that doesn't really work, and as long as you're profitable. No, that is absolutely not what he said.
And nor does it contradict like the J&J credo, where they put their customers first, and then they put the communities and the people that work for them, and shareholders are last in the J&J credo is the point. And when Friedman was asked about that, he said, "Well, they're making my point. They have to do all of these things because that's the law and that's ethical framework." They have to please all of these stakeholders, if you will, but ultimately they're responsible for the best return for the business and the shareholders.
Over the long term.
Over the long term. That's right. Even though he doesn't really say that, and everybody said, well, it's just to increase profits. No, it's to maximize the value of the business. And the book that we did a show on, Ed, and I forget the show number, but The book is by R. David McLean, and it's The Case for Shareholder Capitalism, How the Pursuit of Profit Benefits All. And here's what he said. He said, Milton Friedman was not proposing a new theory. He said, but the goal is to maximize the value of the business or shareholder wealth. The manager who is trying to maximize a business's value behaves differently than the manager who is trying to maximize its short-term profits. This book is written because both shareholder capitalism and the various corporate social responsibility doctrines that are trying to replace it are being misrepresented. And I think that's a really great point. Now, of course, McLean is a finance professor, not an economist. So, think of it this way. Friedman is talking more at a macro level, big picture. Mm-hmm. The discipline has to be the bottom line, whether that's shareholder wealth, long-term profits, whatever. But if you're not responsible to that, well, then tell me, who are you responsible for or to? You can't be responsible to all the stakeholders, because then you're responsible to no one, because then any trade-off you make can be justified.
Yeah. I mean, as we've talked before, so if customers want lower prices, but workers want higher wages. Well,
suppliers want higher prices for what they sell us.
What they sell us. So what do we do? Well, we try to maximize for what? For the best return on between those two numbers. Yes, you want to maximize your prices as best you can, while still selling. Even though customers want lower prices, we still want to maximize that price. But you got to do that by creating maximum value. I think that's the other thing that gets left out of this equation all of the time too, is that revenue comes from the creation of external value. And I think Friedman misses making that point in here. And I think that would have helped if he had said that. But we are up against our break. Want to remind our listeners they can get a hold of Ron or me by sending an email to asktsoe@verisage.com. The website is The Soul of Enterprise, where you can see show notes as well as previews to upcoming shows. Want to remind you that our Patreon channel is available, patreon.com/TSOE, where you can hear the show commercial free, as well as with our bonus episodes, which we do after most shows on Fridays. And at a certain level, you can get a shout out like Geraldine Carter does. Business Strategy for CPAs podcast is her podcast, and you want to take a listen to that, go over on to geraldinecarter.com. But right now, a word from our sponsors.
All clear. Back into.
I'll bring us back, and I'll talk a little bit about that the individual stuff.
Yeah.
Which is the next section.
Yep. Excellent. Yeah. Which is, of course, why.
Oh,
go ahead, Greg.
Sorry, I want to say hello to Donna. She's watching via the live stream, so I thought that'd be kind of cool for her to hear.
Yes, I did see that. Sorry, but we got out of my sight there. Hey, Donna.
Okay.
Hey, Donna.
Sorry about that, Ron. Please continue your thought.
No. Just his point about excluding the independent, the sole proprietors, because they can do what they want.
Of course, because there's
I
no principal agent problem there.
I always use the example, if the employee were to spend some of the sole proprietor's profit on what, save the whales or whatever, that wouldn't be right.
Mm-hmm. Yeah, right.
And that's kind of the same thing with the public companies.
Right. Well, I think that's an important point to make, but we can talk about that. Oh,
yeah.
Yeah, we'll hear about this one, Ron. There'll be people who disagree. Huh.
Yeah, I know. Some of it's semantics. Some of it's just can't be right.
It's semantics, but it's misinterpreted. But I think it's partially intentional on a lot of people. If you a careful reading of the article does not allow you to come to many of the conclusions that the critics do.
Agreed. That's why I've probably read this so many times, because I'm not even sure I understand it all.
Yeah, and, it's not. You're right. It's not his most clear writing. It's not his most clear.
It's not. Having been, schooled by him in so many different areas. I think he could have been a little bit clearer, and it would have been nicer if he used better examples, maybe, about the difference between, long-term and short-term. Because that's a big bugaboo. And I just think it's just nonsense.
Yeah.
I mean, I used to say, well, the jury's still out. No, the jury's not out. We've got way too many examples now of companies that are making long-term investments. Give me a break that everybody's running for the next quarter,
Yeah. Yeah.
I don't buy it. Don't buy it at all. And
All right,
shareholders
coming back.
wouldn't buy it either.
Yep. We're ready.
All right, coming back in 5, 4, 3, 2.
And we are back on the Soul of Enterprise. We are talking Milton's Mandate, the market, morality, and money. So, Ron, the next section of this, he makes this distinction between the executive as a person and what they do as an individual. He says the corporate executive is also a person in his own right. They may have other responsibilities that they recognize and assume as voluntary to family, conscience, feelings of charity, church, clubs, city, country, etc. And we may refer to some of these responsibilities as social responsibilities. Okay, that's fine. But if one is acting as the principal and not the agent, then you're spending your own money or time or energy and not the money of your employer. Then you can do whatever you want. If these are the social responsibilities, they are the social responsibilities of individuals, not of the business. And then during the break, you made a really good point about a sole proprietor. So why don't you talk a little bit about that? An employee.
Yeah, the reason he excludes the individual proprietors is because they can do what they want with their profits. They are the principal and the agent, if you will. But in a public company, the principals are the shareholders, the agents are the corporate executives. They're employees of the principals, of the shareholders. And it would be ludicrous if a sole proprietor hired an employee and that employee dipped into the profits of the sole proprietorship to spend it on charitable activities that they believed in, save the whales, whatever. Well, that's what's going on with public companies. You've got employees spending the owner's money on charities they deem, important or socially responsible or whatever. But that should be left up to the individuals with their own resources. And including the shareholders.
Well, wouldn't the argument then be made, and I'm trying to now steelman the hypothesis that as has happened recently with Apple, where ESG was up on the agenda, that the shareholders voted to say, nope, we want ESG.
Yeah. And if the shareholders vote for it, that's fine. If the shareholders accept it, or if it's part of the IPO and they know going in that the company's going to do this, just kind of like
which is my Whole Foods argument, right?
Yeah, the 10% of profits to charity or whatever. I have no problem with that. But the problem is, by and large, shareholders don't invest in companies to make less return. They want to maximize their return. And I think overall, you need that discipline to keep the agents in line to make sure. This is why companies are audited as well.
Right. Now, and I think what Vivek Ramaswamy brings up in Woke Inc. is that we have a double principal agent problem now because there's so many institutional investors that have been taken over by people so the institutional investors who are really pooling the money of us in our 401ks into one place, they're voting as a block, but without really consulting the individual investors.
Right.
So it's a double principal agent problem now.
Absolutely right. Yep. And I know some of the big outfits like BlackRock have given more power to the individual investor to make the proxy votes and whatnot. But not sure how far that's gone. But that's a whole nother issue. And the other thing is, and I think this is a really important point that it's kind of a subtext in the article. I think he does point it out pretty explicitly somewhere. But when he says, he says, if this statement is not just pure rhetoric, the social responsibility, it must mean that the agent is to act in some way that is not in the interest of his employers For example, he is to refrain from increasing prices to prevent inflation, right? He's to hire the hardcore unemployed instead of better qualified available workmen to contribute to the social objective of reducing poverty. And because he's spending someone else's money, he is in effect imposing taxes and deciding how the tax proceeds shall be spent. Now that's a very interesting point. He is spending the principal's money, and then he's basically taxing them, and then deciding how it should be spent as well.
Right. That is the hardest part, I think, to pick up in this article. You can read through that set of paragraphs 2 or 3 times and not completely grasp the point that he's making, because it's a weird construct to say that he is not only doing he is in effect imposing taxes on the one hand and deciding how the tax proceeds shall be spent on the other.
Right.
Yeah, and that's his conclusion in there. And when the first several times through the article, when I read, I'm like, okay, now I got to go back and read the last 5 or 6 paragraphs a second time. So if you are confused at this point by what we have to say, go to the original article and read that section. It does become clear, but that's where Friedman could have been perhaps more clear in his communication, because that is a very hard section to fully grasp, and his logic doesn't quite flow as well as it should.
Right. He says, we have established elaborate constitutional, parliamentary, and judicial provisions to control these functions to assure that taxes are imposed so far as possible in accordance with the preferences and desires of the public. After all, taxation without representation was one of the battle cries of the American Revolution. But in this case, in the case of a corporation, the shareholders are being taxed, and then they don't even get to decide where the money's being spent.
Right. And this is where the principal agent, the double principal agent, kicks in as well, with the institutional investors who are aggregating the amount, the money for the smaller investors. And there is a parallel here, Ron, in politics, and that is something that I've talked about for years, and that is local elections here in Texas when they're issuing, say, a bond to build a $59 million high school football stadium, right? These are purposely held at very odd times, as in March of every year. So it is definitely not during a presidential campaign year. It's an off year is when they put these bond issues up. You quite literally have less than 10% of the the people who are eligible to vote even vote in these elections. And then so therefore what happens, sometimes they'll win by a relatively slim margin of, say, 51-49, which means it's really only 5% of the so if you really think about that, why should the default value be that people who don't vote are in favor of it? Because that's effectively what you're saying. Mm-hmm. So this is where it gets to, shouldn't the default value be that unless you have a majority of the people who are eligible to vote, that it should go down, right? So that there should, because they're effectively saying, I don't care. Is that what they're saying? Or are they saying, well, it's not worth it for me to go to the polls, right? Because I think you've got this rigged already. Who knows? Whatever that reason is. But I think the same thing is true inside of these. When the institutional investors do ask, and I was asked about the Apple thing because I own Apple stock through my 401k, about how I wanted them to vote. But I'm sure the same thing is true. I'm sure I was probably one of less than 10% of the people who was eligible to vote in that election who voted. Who bothered to send it in. And I would almost guarantee you, I don't know this for sure, that I bet it was not a majority of the people who sent that in who really wanted that to happen. Most people were apathetic. And what should you count the apathetic vote as? That's a really interesting question.
Yeah, and see, this brings up I think a broader issue that, I don't want to have to worry about Apple and how it spends its money and its internal policies. I'm not there every day. I invested in its stock because I think it's an incredible company that's delivering unbelievably valuable products and services, has a great track record, and I want to maximize my return. I don't want to spend my time doing proxy votes and having to read up on its corporate policies and all of that. And this is why I think the general principle that a company is there to maximize shareholder wealth makes a lot of sense, because on average, that's what people want when they make investments. Now, I know there's a host of exceptions. There's B companies, there's your Whole Foods example, there's lots of exceptions to that. But by and large, nobody wants to lose money when they make investments. That's why people are pissed off right now about the stock market tanking because of these tariffs.
Mm-hmm. Which is next week's show, folks. So let's not go there, though, Ron.
No, we won't. We won't. And then he points out that when the agent spends this money, he becomes in effect a public employee, a civil servant, even though he remains in name an employee of private enterprises. And then he draws the distinction, another great distinction, I have to say. Civil servants are elected. Mm-hmm. These people are appointed or hired as employees. They're confusing functions here. So yeah, it's amazing. And then the next section of this, he says, this is the basic reason why the doctrine of social responsibility involves acceptance of the socialist view that political mechanisms, not market mechanisms, are the appropriate way to determine the allocation of scarce resources to alternative uses. And this is just a way of saying, Ed, and I think he could have said this in some way, that you're bringing politics into the C-suite. This has been my argument against ESG, but ESG's got great intentions. Well, yeah, but it's political.
Right.
It's always been political. This is why I laugh my butt off when I hear Larry Fink go, well, ESG's become too political, so I don't use that term anymore. It's always been political. Are you kidding me? Scope 3 emissions? Give me a break. If that's not political, I don't know what is. No company would impose that on themselves.
Yeah. Yep. All right. Well, Ron, you're going to have to tell us what you really think in the next segment. So, but we have to remind our listeners they get a hold of us by sending an email to asktsoe@verasage.com. The website is The Soul of Enterprise. You can see show notes as well as previews to upcoming shows. I'm going to give that shout out again to Geraldine. You know why, Ron? Because I really did not say what she has been asking us to say, which is at peak freedom, if you want to rise above the insanity of the hustle and culture and simply work less hours while keeping your income, go and check out GeraldineCarter.com/peak. But right now, a word from the rest of our sponsors.
All clear. Let me know when you're ready for your counting back in.
Ron, I'm going to talk a little bit about the next section that starts on the grounds of consequences, because all right.
This is an incredibly important section too.
Well, and I want to read most of it because I'm going to make the point is like this creates more questions than it does answers, even if you accept the premise, right? Even if you accept the premise. So that's where we'll go.
It's funny how you and I picked out the same things to emphasize,
Well, part of this is that if you read this enough times, you'll end up highlighting the entire article. So,
yeah. That's very true. And I tried to be really disciplined about just certain, but he's making a lot of points in here.
No, it is concise. It's just not as clear as maybe we should run it through ChatGPT and say, take this article and make it more clear.
And then ask it for the strong man critique. Yeah.
Very interesting. All right, we can take the count in.
Coming back in 5, 4, 3, 2.
And we are back on the Soul of Enterprise, talking about Milton Friedman's mandate, the market, morality, and money. This is his article that goes back to 1970 in September, also known as the Friedman Doctrine, by the way. If you look it up on Wikipedia, that's what you will need to find is the Friedman Doctrine. That's the article on this. Ron, in this next section, he says, okay, even after stating all that, what if I accept your premise that corporations should be socially responsible? What then? And he says, okay, how in fact do they discharge this social responsibility? Do they get away with spending the stockholders' money on employees' money? How is they to know how to spend it? Must the contribution go to fighting inflation? To contribute to what end? Presumably, he's an expert in running the company, not in how to fight inflation or anything like that. Will holding the price of his product reduce inflationary pressure? Maybe. Leaving more spending power in the hands of customers? Or would it just divert that inflation elsewhere? Or Will they produce less at a lower price? Will it contribute to shortages? Even if we could answer these questions, the cost of how it's justified to the stockholders for the social purpose. What is appropriate at what shared and what is appropriate for how they allocate it? It creates far more questions than it answers. Once you say, even if you grant the premise, okay, now what?
I know. I think this might be his strongest point, believe it or not, because a corporation is a very, very specific institution with certain particular knowledge. It doesn't know how to save the whales. It doesn't know how to cure poverty. It doesn't know how to fight discrimination. It doesn't know any of that stuff. It knows how to build cars, really well and try and stay up with that whole thing and innovate and all of that, but it has no expertise. And that's an incredible point. This kind of goes back to knowledge equals wealth, right? Knowledge is very, very, very specific and very tacit. You can't be an expert in all these other things. That's why we have individuals choosing their own charities and causes and spending their free time with churches or mosques or other, charitable activities, and because they have an interest in something and they have expertise. But I don't expect an auto company or a company that makes appliances to have expertise in saving the whales. That's a critical point.
It is a critical point, and you also have this notion of, okay, well, if I keep my prices artificially low, well, now maybe I'm creating a shortage. I mean,
Exactly.
Or because now I'm going to have to keep the wages low. And then that's where he transitions into, okay, again, this is, I think, his second major point, which is let's just say the trade union as corporation. Now, what do we do? Is it a conflict of interest? That's when the unions are asked to subordinate the interest of their members to some more general societal purpose. If the union officials try to enforce wage restraint, the consequence is likely to be wildcat strikes, rank and file revolts, and the emergence of strong competitors for their jobs. So once you start to put the same constraint, well, isn't a union a corporation? Yes, it is. Well, what is it supposed to do? Maximize the interest of the union members.
And I don't see anybody complaining about the unions doing that. I mean, the UAW is strongly in favor of Trump's tariffs.
Right, I know.
Why? Because most auto workers are not UAW members. They've got something like 5% of the auto workers are UAW members. They've got more people at the University of California in their union than they do in, General Motors. They just want members, but nobody gets upset at the unions for wanting to maximize. What was the famous line by one of the union? I forget the big guy. It was
downtown
guy.
Willie Brown. I think that's who you're talking about. With the teachers union.
No, it was. It was one of the old guys, like Lane Kirkland, said, "What? Okay. Well, what do you want?" And he said, "More." That was it. One word: more wages, more benefits, more time off, more rules.
Well, Willie Brown, when he was the head of the teachers union in California, was asked if he was taking into consideration the needs of the children that the teachers were serving, and he said, "When a child joins my union. I will take that. I will take that into consideration."
Yes. Yeah, that's like one of the union guys was being given a tour of an auto plant, and they had all these robots, and he said, and the great thing is they don't join unions, And the union guy came back and said, yeah, and they don't buy cars, but but that it's a whole nother thing. But Friedman does say this, Ed. He does say that let's see. What it amounts to is an assertion that those who favor the taxes and expenditures in question have failed to persuade a majority of their fellow citizens to be of like mind, and that they are seeking to attain by undemocratic procedures what they cannot attain by democratic procedures. In a free society, it's hard for evil people to do evil, especially since one man's good is another man's evil. This is where he is saying that they're coming into the C-suite trying to attain all these goals because they can't get them passed by the voters.
Mhm.
So in that sense, he is saying that this is politics in the C-suite.
Right. Right. Yep. No, I think that's right. It's like, which is a good idea does not require it be mandated to be put into effect.
That's exactly right. Yeah. If it's win-win, it'll be voluntary, no coercion needed. Right. The other part I like about this, and this is where this explains why when Friedman was presented with the J&J Credo, he said, they're making my point. This is why. He says, to illustrate, it may well be in the long run interest of a corporation that is a major employer in a small community to devote resources to providing amenities to that community or to improving its government. That may make it easier to attract desirable employees. It may reduce the wage bill or lessen losses from pilferage and sabotage or have other worthwhile effects. Or it may be that, given the laws about the deductibility of corporate charitable contributions, the stockholders can contribute more to charities they favor by having the corporation make the gift than by doing it themselves, since they can, in that way, contribute an amount that would otherwise have been paid as corporate taxes. Now, there you go. Hiring good people, being a good steward of your community, these are all in the J&J Credo. He said, yes, that's my point. You're doing this to get goodwill, to hire great people, great talent, keeping your community, desirable place to live so you can expand the labor pool. And if the stockholders agree, yeah, we can give more to charities and get a bigger deduction. This is when tax rates were a little bit higher on corporations, right? That's why I think he felt the need to make that point. But and he said this is just another way for the corporation to generate goodwill. So in a way, it's a marketing expense, which we've always accused CSR of being. When you strip away all the BS and all the virtue signaling, it's really just marketing. And Friedman has no problem with that as long as the results are desirable. What's the result? How do we measure? What's the metric? What's the measurement? Profits or shareholder wealth.
All right. So this was another point that was made as a knock on it. I want to see how you would think Friedman might answer this. He's saying corporations can give to charities. Isn't that the same principal agent problem? Who gets to decide? Like where do you go from there? Isn't that the same as being corporately socially responsible outside? If we say I want to give to some charity that maybe the majority of even the people inside the company don't approve of, who knows? How do you decide where that goes?
Yeah, he didn't flush that out, but I can imagine that he would probably say, well, if a car company is making charitable contributions to, say, a TV show that runs their commercials or in some way is linked to automobiles, that people would see that as natural and in the due course of business, ordinary and necessary type expenditure. But if they're trying to save the whales or something, then the shareholders should try and stop it, I guess. I'm not sure how he would answer it specifically, but I think he would say, well, in general, it's pretty obvious if what you're contributing to furthers the corporation's interest.
And he would let the agents have autonomy to make that decision.
There would probably be, he would probably say something like they probably have some discretionary authority, but when they clearly step outside of the bounds, the shareholder should restrain them.
Would you be? I think it's Fidelity Investments. Their logo is the whale flipping over on the back. So would you be okay with Fidelity Investments giving to a Save the Whales campaign then?
No, I wouldn't be.
I think that's I had trouble with this section because of that, because I think you end up sometimes in the same spot.
Yep. And we could sit here and dream up a million scenarios, right? And this is what makes rules so hard. But there are obviously things that a corporation has to do to be a good steward and a good citizen of the community.
Does it though? I mean, it taken to the extreme, wouldn't you say, no, you maximize the profitability of the company and then let the individuals who live in that community, that way, if I maximize their wages instead, they will decide whether or not they want to build a park rather than have the company build the park.
Yeah, I could see both views, actually. I really could, because we're all about individual autonomy and individuals making decisions. And I rather have the money either through dividends or cap gains to be able to support the charities I like rather than the corporation doing it, unless there was some agreement with the shareholders that, yes, we want the corp to do it because there'll be less taxation.
Right, but that benefits the corporation because of less taxation. I'm talking about all things being equal on the tax side. But anyway,
right. Like they are now, though. I mean, the corporate rate is much lower.
Yeah. Yep. All right. Well, we got one more segment to go on. This is a fascinating conversation, Ron, but want to remind our listeners they can hold of you or me by sending an email to asktsoe@verasage.com. Please go visit the website, thesoulofenterprise.com, for show notes and previews to upcoming shows. We also want to remind you to rate this podcast by going to ratethispodcast.com/TSOE. Anytime you do that, we will be sure to read your review on the air. But right now, a word from our sponsors, including Woodard.
All clear. Let me know when you're ready for your counting back in.
You know, it's really interesting, Ed, in the very next paragraph when he says that if our institutions and the attitudes of the public make it in their self-interest to cloak their actions in this way, you know, he's talking about all these things that we just talked about, being a good community, pay the taxes, all of that. I cannot summon much indignation to denounce them. At the same time, I can express admiration for those individual proprietors or owners of closely held corporations or stockholders of more broadly held corporations who disdain such tactics as approaching fraud. He's asking the same thing we just talked about.
Yeah.
You know, he's saying, well, you could say, well, okay, they're doing this for goodwill. They're doing, you know, but on the other hand, this is fraud.
Right.
Okay, Milton, which is it?
Which is it? Yeah.
It's, I mean, it's one of those gray areas, right? I mean,
yeah. Yep.
You could,
you can bring us back around and take us where you want to go. I think we're good. We'll get through this. Yep. Okay.
Yeah, we will. I think some of his conclusions are worth going through. Okay, Jordan, we're ready.
All right, coming back in 5, 4, 3, 2.
Well, welcome back, everybody. We're talking about Milton's mandate, which is the Friedman doctrine. His article from 1970, The Social Responsibility of Business is to Increase Its Profits. Ed, I hope something I wrote 55 years ago is still relevant, you know, but it's amazing. He then goes on to say that I have been impressed time and again by the schizophrenic character of many businessmen. They are capable of being extremely far-sighted and clear-headed in matters that are internal to their business. They are incredibly short-sighted and muddle-headed in matters that are outside their business. Calls from many businessmen for wage and price guidelines or controls or income policies, for example. It helps to strengthen the already too prevalent view that the pursuit of profits is wicked and immoral. He says all of this reveals a suicidal impulse.
Yeah.
They don't understand that they're undermining free markets by buying into this.
Mm-hmm. Yeah. No, we've talked about this a number of occasions. There's a complete misunderstanding of the whole biblical, you know, money is the root of all evil, right? It's no love of money, which is avarice, which is completely different thing. It's materialist fallacy. It's not as we like to call it, the spiritual side of money, because money is the thank you notes for doing a job well done. So just the representation of those things.
And I have to say, this is worth reading. This is the final paragraph in the article. He says, but the doctrine of social responsibility taken seriously would extend the scope of the political mechanism to every human activity. It does not differ in philosophy from the most explicitly collective doctrine. It differs only by professing to believe that collectivist ends can be attained without collectivist means. That's it. That's incredibly profound.
Mhm.
This is why in my book Capitalism and Freedom, I have called it a fundamentally subversive doctrine in a free society, and have said that in such a society there is one and only one social responsibility of business: to use its resources and engage in activities designed to increase its profits, so long as it stays within the rules of the game, which is to say, engages in open and free competition without deception or fraud. So no meth labs, no
Right.
prostitution, no, any of the sin things. That's not what he's saying. He's saying you have to do this in free competition. You can't run to the government for favors, for monopolies, for licensing, for restricting, all of that. But that should be the yardstick: is long run shareholder wealth.
And so here's a more recent example, Ron. This is from a couple of years ago, that the hedge fund manager Paul Tudor Jones said that the opioid epidemic in the United States is due to the Friedman doctrine, because he's talking about because if it's only the only objective is profit maximization without consideration for other stakeholders, would Purdue Pharma and the Sackler family engage in the unethical corporate practices of increasing revenue by abetting doctors to dispense their prescriptions with opioids and without any legitimate medical purpose. Okay, so here's an example. This is from 2022 of someone who is raising a question against the Friedman doctrine, and you're like, you didn't read the second part of the sentence, did you? Because you didn't read
ending.
so long as the rules without the game, which is to say, engages in open and free competition without deception or fraud. You're saying, well, what if they were fraudulent? Well, then that's not what Friedman argued. Like your criticism does not stand because it's not what the article says. So it is classically in rhetoric a straw man.
Right. There's always going to be unethical people in look at government, look at any institution. You're going to have unethical and immoral and people committing fraud and whatnot. He deals with that too in both of his books, Capitalism and Freedom and Free to Choose. What about the huckster, the charlatan, the companies that sell you stuff that doesn't work or whatever? He deals with all of that. That's not what he's talking about here. I find this article so compelling. Every time I read it, I'm like, yeah, that's a great argument. The expertise, the knowledge argument that he's making, I find incredibly compelling, almost on its own. You just don't know how to do this. Don't tell me you know how to solve diversity or equity or inclusion or the environment. That's not your job. Your job is to, drill for oil or refine it or get it to gas stations or whatever. Not for you to decide.
Yeah, it's a very, very difficult. Now, there's some of the other criticisms on this is that it distracts companies and their leaders from innovation, strategic renewal, investment in the future at the expense of short-term profit. And I'm like, well, once again, this is a complete misunderstanding of what he is saying. But I thought that is probably the most bizarre criticism, to say that Milton Friedman would be against innovation, strategic renewal, and investment in the future. I'm like, well, you don't understand what Friedman was talking about at all then, do you?
Yeah. I don't think Milton Friedman would have any problem with a drug company, taking 10 years to get a drug to market or spending $2 billion to research a drug. Now, what he would have a problem with is the FDA, which is a large part of the reason it takes 10 years to get a drug to market. He wanted to shorten that, and get rid of the FDA in total. But there's nothing wrong with long-term investments. In fact, I think shareholders discount companies that don't make long-term investments. Like if they cut their R&D or something like that, shareholders are going to penalize them for that.
And it's going to be certainly held into the factor. We see that all of the time, where people are falling behind the market. Well, that's because they haven't made the investments in the long term well enough. Look, and by the way, I think we talked about this. Yeah, corporations can and should fail too. I mean, that's the other side of this. I think far too many people look at what the system that we have in place and complain, thinking that this is capitalism. This is the trouble with using the term capitalism. I think the almost majority of people, when they hear capitalism, think, well, the system that we have now, which is too big to fail, and we bail out the banks. No, that's not how it's supposed to work. Yeah.
It's profit and loss system. Right? Yep. Yeah. I know. Capitalism without fear of failure is like religion without hell. So there's got to be a downside to this, and so many of them are right in saying, well, this is the fact that they get bailed out is wrong. I wholly agree with that. Right. And they should die if they're not creating value. They should go out of business. Right. And so let me ask you this, Ed, not to strongman, but I'm just curious how you explain it. The show we did a few weeks ago on the boardroom brawl, does purpose win or does profit? And we talk all the time about profit being a result. How do you reconcile that with what we're saying today?
Well, and I think that the problem is that Milton Friedman never uses the notion of purpose. So it doesn't talk about the notion of purpose inside that, and it gets construed as the purpose is to make a profit. Does he actually say purpose anywhere? I don't think he says it's the purpose of a business, right? Except in the title, is maybe in the title, right?
Nope. So
to increase its profits, right? So
yep.
And I think because that's an area where it's a lack of clarity that it is two very different aspects of business. You do have the motive of individuals, which is to profit, increase the profits in the business, but also there is a socially sanctioned purpose of the business, the why of the business. Why do they allow the business to exist? Which is to provide the goods and services, knowledge, whatever it is, to people. That's the front side. And I don't think he has spent enough time digging into that piece of the argument. And I think that's another shortcoming of the article itself, because it's not clear that those are two separate things.
I agree. And I think this is one of the differences between studying economics and reading business books and things like that, because the business books want to keep businesses going in perpetuity. Like it's the worst thing in the world when Kodak went under and Blockbuster, and we point to all these companies, see, this could be you, and try and scare people. Economists don't give a crap about that.
No,
they just want a garden where things die and then things grow back to replace it, and they consider that to be healthy and robust. He does say there is only one social responsibility of business to maximize or to increase.
But he doesn't say purpose. He does not say purpose.
Yeah. And, we just think that a purpose is kind of the guiding light that you're aiming towards, your why. And therefore, you got to have that, because profit's a result of that.
Mm-hmm. Yeah, there's a big difference between being pro-business and pro-market. And I think you and I come down on the pro-market side. Yeah, let the individual companies burn if they don't do well. That's okay. That's totally fine.
And by the way, this is another thing I believe Peter Drucker got wrong. Now, that's a very short list, I might add. But there are, maybe a couple handful of things where, boy, I think Drucker went off the rails. First, his love of Frederick Winslow Taylor and how much good he thought he did. But the other one was he took Friedman to task. And I don't think Drucker understood this. And Drucker understood most things, especially Austrian economics.
Right.
Not just because he grew up there, but he got this one wrong. So, hat tip to Milton. You're still relevant. It's still what I love. People feel they need to take this on.
Yeah, agreed.
And that makes it just as relevant as it was when he wrote it in 1970.
Yep. Well, speaking of taking on, what are we going to do next week, Ron?
Ed, we're going to talk about all this tariff stuff. So I'm just really looking forward to digging in. I know we've talked about this topic before on a show called The Myth of Trade Deficits. I forget the show number, but we're going to take it on again in light of all this new stuff all these tariffs from the Trump administration.
All right, tariff trouble next week on the Soul of Enterprise. I'll see you in 167 hours.
This has been the Soul of Enterprise, Business and the Knowledge Economy, sponsored by Woodard, building your ideal practice with coaching, education, community, and resources. Join us next week, folks, on Friday at noon Pacific time. In the meantime, check us out at thesoulofenterprise.com. We'll have full show notes and where you can get a hold of Milton Friedman's seminal article. Also, if you want to contact Ed or myself, you can send an email to asktsoe@verisage.com. Thanks for listening, folks. Have a great weekend.
All clear. Great show.
Thanks, Jordan.
All right, Jordan.
Hope you all have a great weekend.
You too. All right, overtime segment.
Oh boy, you guys are going to propel her head out of out again.
What? On what?
on tech or small language models or sending people to the moon.
I thought that we did a really good job of explaining small language models.
You guys, that was a great show. I was riveted. Really, that was a great discussion. I thoroughly enjoyed it, and you picked some great topics from that 1,000-page report, Greg. That must have been overwhelming.
And I'm a space geek, so at the end we just had to do that at the end, right? I had to.
Sure.
Ed suggested another topic during the break. I was like, no, we're doing space. Come on, man.
Space.
It was fun.
Yeah.
The Friedman. I did not know this was called the Friedman Doctrine, so shame on me for not knowing that. I did know that Milton Friedman had written a seminal piece back in the 70s. Now I know it was September 13th, 1970. And it feels to me like one of the more compelling undertones of the article is, in summary, who is the businessman and the corporation to say this is the right thing to do with the dollars outside of the corporation?
Right.
Yeah.
Right.
It's essentially it. Yeah.
Yeah.
I mean, and if you want to AO on this, Ed, there's the Ford case where the Dodge brothers, they were shareholders in Ford when it was public. They sued them because they said you're wasting corporate resources by paying your salaries too high, the $5 a day, by dropping the price of your cars. This isn't your money. You're not maximizing. And the court agreed. Said, Ford, you got to pay a dividend. And they ordered Ford to pay a dividend. Ford was so pissed, he took the company private again.
Which is his prerogative,
Yeah. And that's certainly one way to do it. We've seen companies, not terribly often, but we've seen enough companies go private to know that oftentimes what they're really looking for is a relinquishment of their duties as a publicly traded organization. That's perfectly acceptable.
Yeah, that's exactly right. Yeah.
No. No, it's go ahead, Craig.
I can see why you would return to this article over and over again. And there were plenty of links in the show notes. There will not just be one link as I take the show notes and publish them out to the website. Most of the posts that went out on X, Twitter today were direct quotes from the article itself.
Yeah.
Oh, great.
Yeah. Which is, I've had people say to me, I can't read that article. Why?
Yeah.
It's too slanted. The language, I can't get past the language. The fact that it says businessmen, I can't get past it.
Wow. In 1970, it was a businessman.
Wow. You can't get past that. You can't nope. Oh, okay. You know what? Maybe put it in ChatGPT and say, make this gender neutral, would you?
Did you listen to Barry Weiss with John McWhorter?
Yes, I did.
On pronouns?
Yes.
That was a fascinating conversation.
It was a fascinating conversation. But you'll appreciate it, Greg. Barry Weiss is with the Free Press, and the name of the podcast is honestly, the name of this episode, and the name of McWhorter's new book that's out is called Pronoun Trouble. Do you remember where he got that from? No? The Bugs Bunny cartoon with there's the problem, pronoun trouble. It's not that he doesn't have to shoot you now. It's that he doesn't have to shoot me now. But I say he does have to shoot me now. So shoot me now. And Donald Duck gets blasted in the face again. Right?
Yep.
There's the pronoun trouble.
That's great, actually. That's a deep cut reference. I'm okay with that.
Yeah. Wow.
That scene is hysterical.
As my kids get older and I make all of these dad joke references, if they're cartoon related, forget it. Just forget it. In order for the joke to land, I have to explain the background, and then by the time I do that, I'm like, why am I even trying?
I've actually made my kids sit and watch a couple of the classic Bugs Bunny cartoons. Hoist, the one where he's Robin Hood. Daffy Duck is Robin Hood, and he keeps hoist and away, and he crashes into the tree. Hoist and away, boom! It's like all the way down. It's just over the top. And Foghorn Leghorn, which
oh my god, he is classic.
I'm a chicken hawk.
Do you guys know that there was a Wile E. Coyote movie made last year by one of the major studios?
Oh, really?
I think it was called Acme Inc. I forget exactly what the working title was.
Hysterical.
But in order to cook the books in a legal way, they canned the movie, decided not to release it, and took the entire cost of production as a loss. And it looks like this movie might get a theatrical release through an alternative studio now that the loss has been taken and they don't care anymore. But yeah, Wile E. Coyote was going to have his own movie as of last year. It was Warner Brothers, Universal. It was one of the big studios.
Right.
Canned it, took the entire movie as a loss, and moved on. Not because the movie was bad, but because they needed the loss.
Interesting.
That's interesting. Yeah.
See, I would probably go see that because that's fascinating. I bet that'd be a kick.
Well, we haven't talked about this yet, Ron. Have you heard about the Snow White controversy? Have you been following the Snow White?
A little bit, but fill me in. You might know something I don't.
So first of all, what's the title of the movie?
Snow White.
That's right. It's just Snow White.
Yeah, where are the dwarfs? And they were what did they do? Some type of animated thing? And
they did CGI on all of the dwarves. And the speculation is that, but yet there's also the prince is not a prince. He's more like a Robin Hood type character. And he's got 7 merry men with him kind of thing. And the speculation was that they were originally going to do it where there was no dwarves at all. And like as they're cutting through the movie, they're like, "There's no dwarves. It's Snow White. There's no dwarves." They're like, "Okay, well, we'll just have to see. We'll have to just CGI them in." Well, so they created these CGIs. Now, of course, the dwarf community, including the guy who is in Game of Thrones and the guy who is in Elf, he is pissed.
You're denying employment opportunities. Yeah.
I was going to say Peter Dinklage would have. That's his name.
That's who it is. Yes.
Amazing Snow White and one of the 7 dwarves. He's an outstanding.
He's an outstanding actor. Period. End of story.
God, that scene from Elf. Call me little one more time. That is a classic movie scene, and his role in Game of Thrones was. Easily my favorite character. Right? So it's not like they had a shortage of talent to pull from. This is clearly a decision they made for other reasons.
Pun intended on shortage of talent, right?
Right. Yeah. Plenty of talent to pull from. Yeah.
Either of you guys seen this movie yet?
No.
Okay. And the gal who plays Snow White is like pro-Palestinian and. She said some things. Disney tried to rein her in, and
the co-star, the one who plays the evil's queen, is Gal Gadot, who's from Israel.
Is right, yes,
and has fought in the Israeli Defense Force.
Right.
So it was really a cluster. I mean,
it does bring up something I want to ask you guys about, especially you, Greg, because I find this fascinating.
By the way, just to finish up this conversation, $250 million, Ron. The movie. $250 million.
The gross.
No, that's what they spent on it.
Oh, that's what they spent on it. Oh, okay. And it's bombed, right? So
Yes.
Yeah, but they still couldn't beat Netflix, who spent $334 million on Electric State, starring Chris Pratt, and it is one of the worst rated films ever to be released by Netflix.
Wow. So this is from Ross Douthat, Ed. And of course, he writes movie reviews for
the Times,
National Review and for the Times, but for National Review too. And Greg, he says Snow White's getting harsh reviews, audience indifference. His New York Times colleague, Ezra Klein, of Abundance fame, was interviewing the Democratic pollster David Shore about the 2024 election. And both were marveling at the indicators that young people are moving right, with Gen Z becoming potentially the most conservative generation that we've experienced maybe in 50 to 60 years. And I'm just thinking, if that's true, if you accept it, and I don't know if it's true or not, I hear it is, but I don't know. But that would not just be a political thing, that would also be a commercial thing. How will that impact marketing, ad agencies, commercials, Super Bowl commercials, if this is true?
Yeah.
I have a few customers. I won't name them because it's not important, but I have a few customers who lean heavily into, I don't know what to, conservative beliefs, I think is the best way to summarize that, right? And this isn't just one example I'm thinking of. There are probably 5 or 6 organizations that I work with who purposefully lean into conservative beliefs and sell a product into that market, effectively walking away from 50% of the market. Effectively walking away from 50% of people, right? Which isn't truly the market or the addressable market, right? And they're all doing extremely well, not because they've leaned into the conservative as a market, but because they have a very defined audience. They know their audience. They know how to speak. They're all of the reasons that you, Ron, and you, Ed, would give in terms of niching your business down and as a result being able to better define your audience and your message and your positioning, right? This happens naturally by way of them leaning into what we would consider to be a conservative audience or a set of conservative beliefs. So I have more than a data point of one. It's still a pretty small sample set.
Yeah, sure.
To indicate to me that. Because if you tried to do this on the other side, on the left side of the political spectrum, I think it's a bit too, as it has been for many years, right? It's a collection of beliefs or belief systems, whereas on the right side or the conservative side, it seems to be a more singular or more singular set of beliefs. So it's easier to lean into that from a sales and marketing perspective. That's just what I see in the marketplace.
Yeah, that's really interesting.
Yeah, no, I think if we're seeing an interesting thing, just revival wise, so to speak. So typically, our church will have this thing called RCIA, which is the Rite of Christian Initiation for Adults. So this is like people who were not baptized Catholic but want to become Catholic. And that process happens throughout the year, but it's culminated at what's the Easter Vigil, which is the service before Easter. And typically, in a typical year, we would have between 2 and 5 people, right? We've got 25 this year.
Wow. Wow.
25. And I'm just like, something's up. I mean, that's something is up.
Yeah, you hear about this religious, revitalization, and I just wonder about it. Yeah.
Well, I think part of it is, this goes back to something we've often talked about, is like everyone worships, right? This is, I can't think of the guy's name, David Foster Wallace, his point, everyone worships, and you're going to worship something. Choose wisely. Choose wisely is his point, Well,
I choose Rolex.
That's fine.
Did either of you see the movie Anora?
No.
Okay, this is another point that Ross makes in this article. He says Hollywood comedies he said Anora was won Best Picture.
Yeah.
Gets described as a screwball comedy. He said it's not funny the same sense that Tootsie or Mel Brooks or Ivan Reitman are funny, but he said it's a move in the direction of more that just comedy for comedy's sake, like a back to school, Caddyshack,
Right.
Airplane. Probably not as wild as Airplane. Airplane might be a one in a lifetime thing. I don't know.
Yeah.
But I hope comedy's coming back.
Yeah.
Yeah, most definitely.
I would think, but I don't know. It's complicated. It's complicated. So how's the undisclosed location, Greg? All good there?
Excellent. Yeah. For those who can see the live stream, I'm what I like to say operating from an undisclosed location for operational security purposes, which is otherwise known as on vacation. It's wonderful. My wife's birthday is today. We are headed into town. We have a dinner reservation later on today, and it is what they call First Friday in town. So they block off all the streets, and they have vendors with food and drinks and games and music. So it should be a good time this afternoon. I believe that my family is coming off the beach right now, and I'd much rather be with the two of you than with my family on vacation. So thank you for allowing me to join you.
You'd be happy to know that one of the updates of Zoom, Greg, I don't know if you saw this, is workflows that you can build in, and one of them is PTO requests. So we may be able to get rid of the in triplicate carbon copy forms of the PTO requests for you.
Oh, that's great. That's great. And very quickly, just to tie everything back around to our, I hope comedy's coming back, and to tie it back around to our initial conversation about Snow White. We were speaking with a family, speaking with my family and the family that joined us here about recent movies that we've seen. This is a dinner conversation, right? What have you seen recently? And I looked at everyone. I was like, can you name 2 movies that are in the movie theaters right now? And nobody, there are 8 of us. Nobody could name 2 movies that are in the movie theaters right now.
Snow White, only because we've been talking about it.
Because we've been talking about it. It's gotten a little bit of news, not because they've seen it. And it's fascinating to me that I believe at this point people would much rather be able to watch a movie from a relatively decent sized television in their home. They can hit the pause button. They can go get their own popcorn. They don't feel like they're getting excessively charged for snacks or drinks. And they can enjoy the comforts of their own home without having to suffer through the movie theater experience. And until that movie theater experience is done, and I don't mean the equipment. You can go to some pretty nice movie theaters, right? The equipment is outstanding, but the general experience around the theater. I mean, how many of us like to stand in line and wait to order popcorn that's been popped 25 minutes ago and is sitting under a heat lamp loaded with artificial butter? Like, who wants to do that, right? So until that experience is nailed, I think they have a problem.
That said, one of the most popular is I guess it's considered a movie. I don't know how they're doing it.
Draft House.
No, well, yeah, but that people are going to see the last month, the theatrical releases of The Chosen.
Oh, wow, yeah.
Mm-hmm.
Because it's only available on the app, right?
And well, they're making it available in the theaters first. They're releasing it I guess 5 episodes at a time, which is roughly 2.5 hours. So and they're doing 3 of them. So it's I guess 15 episodes total or something, and they're releasing them. You can go see them in the theater, and then they'll be released en masse, I think, on the app a couple of weeks from now.
Wow!
But people are flocking in to watch The Chosen.
Clever.
Yeah. I know, it's pretty good, wasn't it? I know.
Yeah. And that reminds me, why did I have to wait 5-6 years to see the original cast perform Hamilton on my Disney Plus account? And why is it likely that I will never get to see the current cast of Glenn Ross on Broadway? And I'm looking at Broadway. I need you over here on camera too. Come here.
Right.
Like, this is a huge revenue opportunity. Set up the cameras, build the infrastructure, and release first run Broadway shows theatrically. We
They
would
don't-
all go and watch them.
They don't think like that.
No.
God, and they
No.
could charge a premium.
Oh, if you charged me $30 to see Glengarry Glen Ross in a theater in Atlanta, Georgia, where I live,
Who's in it? Bill Burr.
Bill Burr is one of the lesser known individuals
Right.
in it. I mean, it is a star-studded cast, but instead I have to get on a plane and fly to Manhattan and buy, and that's not terribly practical.
Mm-hmm.
So I'm just putting that idea out into the world in the hopes that maybe someday something like that will happen.
I'm surprised the South Park guys didn't do something with Book of Mormon like that.
Yeah, because they understand
Is
both
there-
worlds.
Yeah, they're pretty marketing driven. Hey, Greg, have you heard anything about Family Guy? I saw a documentary with Seth MacFarlane and some of the animators. They're making a movie. And they're
Yeah.
Did you hear? Have you heard that?
Mm-hmm.
No.
I don't know anything about it, though.
Okay, I don't need. All he said was there are some things. He said we can do a lot on TV because we're animated, so we have a lot of room. He said, but there are some things we can't do, and therefore we're making a movie. And I'm just like, oh my god, because some of the shit they do on the show is like South Park, over the top. What they're going to do in a movie would, I think, blow my mind.
Yeah, and it was South Park was bigger, longer, uncut.
Yes.
Was the name of the movie, right? So yeah, Family. No, I don't have any details on it. I do know that they're making it, and I'm pretty excited about that.
That could be, it could be unbelievable. Yeah. I mean, the guy's a genius.
Yeah.
And after listening to some of the animators, they're pretty smart too, but some of the producers and writers.
Yeah. So, just to quickly, Kieran Culkin, Bob Odenkirk, and Michael McKean are all in the Glengarry Glen Ross
And also
revival.
Bill Burr.
And also Bill Burr. Yeah, and also Bill Burr.
That's Mamet, right? David?
Yes,
David Mamet.
David Mamet. Yeah.
Yeah.
Classic.
Yeah.
That's, Alec Baldwin, coffee is for closers.
Yeah. We can't even quote those lines.
We can't
on the
even
show. Even if we were not
coffee
concerned about being
down.
family friendly, we
Yeah.
still can't quote the lines.
What's my
right, so-
name? Blank you. That's my name.
And
Third place, you're fired.
You're fired. Instead of steak knives. Second place.
Yeah.
Oh,
So
all
yeah,
right.
so I'm going to go get shower and get ready for the evening from the undisclosed location, and I will see you gentlemen again next week. Get into the bonus episode.
All right, sounds
thanks,
good.
Greg. Have a good
All
one.
right.
Have a good vacation.
Yep.
All right, Ed.
Wait, hold on. Yep.
Oh,
We got a couple